off the economic break. You know, we just talked with Matt Boesler and just talking about this dual mandate. It makes it very, very tricky for the Federal Reserve, Tim.
Especially when you get, JOLTS data that shows that job openings, even after a deceleration last month, are continuing to move higher. So despite that anecdotal evidence that Caroline mentioned, it seems like one of the only places where the Fed's work is actually already making its way through the economy, and look, a lot of this data is backward-looking, is the housing market. Where else can we point to slowdowns like the Fed wants to see?
I think to that point, that's the key message in the economic note that we got out of Piper Sandler this morning, warning us that the Fed has tried to pivot before. They've tried to hint, remember June, that 75 basis point hike?
And the rally that came after, right?
That was supposed to be a one-off. I mean, and then they've had to go a lot more than that. So if there's any hint of a slowdown, they're going to have to really insist that it is data dependent and not commit, because they've tried to commit before and they've been forced to go 75.
Right, but right now this is all wishful thinking in the market. I think Jay Powell, and for that matter, most of the disciples also on the FOMC have made it clear that they're going to continue until they actually get to that idea of the terminal rate getting above wherever inflation is. And then we're getting comments right now from the Bundesbank president over in Germany talking about the ECB and its fighting inflation. This idea, in his words, that they have to be more stubborn than the stubborn inflation, and basically that there's a long-term danger in long-term inflation expectations going above the current target, which of course it's already above that target. But the idea here is that if they don't sort of continue to sort of try to pull back in on economic conditions, try to pull back in on inflation, then nothing else really matters longer term. It ends up becoming a disaster.
It is notable, of course, the Bundesbank are always the more hawkish out there when you're looking at the ECB, their history with inflation, hyperinflation. It makes them more focused in that direction. But you're right. I like that JP Morgan's Kalanovic is really talking about not just the US Federal Reserve having to peak hikes, but the globe having to as well. And this is, of course, a global issue with central banks all working in unison. Inflation still running hot, particularly in the Eurozone, if you remember those numbers from yesterday.
Caroline, really good point, right? It's a global inflation problem. So how much can each of these central banks do in terms of bringing down the overall trend in higher prices? The other thing, go back to, there's structural changes going on, and that's going to be persistent for some time. That may keep those inflationary numbers up. For the U.S., what does that mean? How much do you risk giving up when it comes to the labor market to continue to fight against inflation?
Do you guys think that this is what the members of the Federal Reserve Board are talking about as we speak right now?
Yeah,
I hope so.
Probably that and bicycles and a lot of other things. But there's
bicycles is a true inflation
They have enough
story,
anecdotal. I mean, we talk about them being data dependent, but there's enough anecdotal evidence as well that I think sort of keeps them on the path that they're on. Whether that means they go back down to 50 in December or maybe something even lower, that's still debatable.
We're still way up. They've got to bring those inflation numbers down. All right, guys, that's a wrap. We'll be back in less than an hour's time. Continue our discussion live on radio, TV, YouTube, and Bloomberg Quick Take. We will count you down to the close on this Tuesday.
This is Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, you're listening and watching Bloomberg Business Week. Carol Massar, Tim Stenovic, live here in our Bloomberg Interactive Brokers studio. So
the Fed is busy. That's the point I was trying to make, Carol. It's like, okay, they've got their work cut out for them. Think about what we just talked about with Matt Boesler, right? This question of the dual mandate and what's taking priority right now. Obviously, stable prices taking the priority. But this is all what we are going to hear tomorrow from Fed Chair Jay Powell. And then one thing I didn't, and I'm going to let you talk in a second, but
no, go.
One thing I didn't get to say is
go.
The idea of a pivot. When we say pivot and when people refer to pivot, I think people have different definitions of a pivot. And you alluded to this, right? Is it a pivot away from hiking 75 basis points and then, just hiking 50 basis points or 25 basis points? Or is it a pivot away from hiking and then leaving rates at 5% for what? A year until inflation starts to come down? Or like Gina Martin Adams talked about, this era of, we're going back to the 90s where we're in an era of high rates.
Yeah, it's not the rates of the 1970s, but it's still going to be, again, I'm going to keep hammering this, but these structural changes that are going on, we can do so much to help, the global inflationary pressure pictures. And we have all, global monetary central banks working on this, but it's something structural going on that is going to keep, I think, prices higher for some time.
All right. Well,
you get
they've got their work cut out for
them. Right?
Yeah.
I'm just going to say.
We don't want that.
No. World of National News. Let's get to it with Nancy Lyons. She's in D.C. Hey, Nancy.
Thanks, Carol. Supreme Court Chief Justice John Roberts is putting a temporary hold on the handover of former President Trump's tax returns to a congressional committee. Former federal prosecutor and Loyola law professor Laurie Levinson on the delay.
This may be exactly what Trump wants, to delay the release of any tax returns until at least after the election, because it's very clear that he and his lawyers have been concerned that if these tax returns are released to the House committee, they will go to the general public.
Loyola law professor Laurie Levinson, Chief Justice Roberts has given a deadline of November 10th to hear from the House committee. On another matter, the Supreme Court is allowing the questioning of Senator Lindsey Graham in Georgia's investigation of election interference in the 2020 election. There were no dissents regarding Graham's subpoena. The nation's factories continue to see a slowdown in orders. The Institute for Supply Management is out with its monthly survey showing orders contracted for the fourth time in 5 months.
Export orders slowed while supply chains eased, Timothy Fury, who heads the survey committee, said in a Bloomberg interview. But few companies see the need to fire workers.
They're freezing, or they're allowing themselves to attrit down. If 3 people quit, they replace 2. Very little signs of people laying off in any kind of significant amount. So we're still in that mode where they're trying to manage their head count. They don't want to lose people that they've worked the last 2.5 years to get. We're in a pretty good position here.
Fury added that the index for prices paid for inputs fell to more than a 2-year low. In Washington, Irv Chapman, Bloomberg Radio.
Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much, Nancy Lyons in our 99.1 newsroom in Washington, D.C. Hey, story by our Blake Schmidt on the Bloomberg terminal. This has to do with Eric Schmidt.
I imagine
head
no
of
relation. Eric Schmidt and Blake Schmidt. I imagine no relation.
Nice.
Yeah.
Probably not.
Those are the first 2 things that stuck out. I always look at the byline.
That's exactly. Well, Eric Schmidt, of course, formerly of Google, ran it, wants to reshape Washington's industrial policy to combat an intensifying U.S.-China tech rivalry, which plays right off of what we talked about earlier about TikTok and what the U.S. may try to do, like ban it here in the United States.
Well, the former Google CEO's philanthropic arm issued recommendations aimed at encouraging U.S. politicians to counter China's rising technological ambitions by ramping up regulatory scrutiny, encouraging more private investment, and offering tax credits to train workers.
Yeah, Schmidt, he's 67. You might remember, stepped down in 2011 as Google CEO, now known, of course, as Alphabet.
I can't believe it was that long ago.
I know. I was just thinking the same thing. What is that, 11
Wow.
years?
Yeah.
Remains the company's third largest individual shareholder after founders Larry Page and Sergey Brin. I forgot about that as well. His stake makes up the bulk of his $19.5 billion fortune, according to our Bloomberg Billionaires Index. But he also invests or has leadership roles in AI and quantum computing firms.
He also writes a lot of books. We had him on just a few months ago, Carol, to talk about one of his most recent books. So he watches this space really closely. Remember, China surprised the U.S. on key battleground technologies, including wireless 5G, microelectronics, AI, as the Asian nation's industrial policy enabled it to dominate markets for drones, high-capacity batteries, critical minerals, solar panels, turbines, and shipbuilding. The Schmidt-backed Special Competitive Studies Project said Tuesday in a report.
All right, so that's all in their report. But these are conversations that we've had. We know also President Xi and Chinese officials for many years have been, putting it out there. They no longer want to be the manufacturing arm to the world. They want to compete on a higher plane, certainly when it comes to technology. And so they're going to put money and efforts and whatever they need to do that. And so this is Schmidt saying, hey, U.S., you got to wake up.
I think the challenge of COVID-0 and like locking the country off to everyone makes that challenging.
Yeah, certainly for China, right? All right, this is Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got the Dow, the S&P, NASDAQ all in the red. 43 minutes to go ahead of the closing bell. Lots going on today ahead of the Fed meeting, so let's head right over to the first word. Breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks are in the red, but off their session lows. The Dow currently down 61 points. Dow was down 248. S&P's dropped 13, while NASDAQ is lower by 85. The U.S. 10-year yield at 4.06%. Gold is up 15. Oil is trading in the green. And Bitcoin is little changed. Among the main 11 S&P sectors, leaders were energy and the financials. Consumer discretionary was under pressure. And leaders to the upside in the Dow, JP Morgan and Nike, while Apple and Microsoft led to the downside. After earnings, Pfizer raised the lower end of 2022 revenue guidance. And in other news, Axios reported the FCC commissioner said the government should ban TikTok. That helps shares of Facebook and Snap. In deal news, J&J to buy HARP pump maker Biomed for $17.3 billion. And wrapping things up, some of the names burning after the bell tonight include Clorox, Mondelez, and Prudential. Live from the first of breaking news desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill Maloney, and to hear live breaking news over at your Bloomberg. Type SQUAWK, S-Q-U-A, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Really do appreciate it. Tim Stenovic and Carol Masser were live in the Bloomberg Interactive Brokers studio in New York, and we have got a very, very special guest with us right now.
Yeah, a former beloved Bloomberg colleague.
I still beloved him.
Yeah. Oh, yeah.
If that's a way to describe things.
Former Bloomberg. Well, he's still beloved, but he's a former Bloomberg colleague. It's that kind of a day. Carl Riccadonna is now the chief U.S. economist at BNP Paribas, and he's here in our Bloomberg Interactive Brokers studio. How are you?
I'm doing fine.
It's great to hear you. I heard you on radio and TV this morning.
Yes, on surveillance earlier this morning.
It was really good. You're doing well.
Thanks.
Okay. All right, now we'll talk about the important stuff. So let's talk about this meeting tomorrow.
What meeting, Carol?
Yeah, Fed meeting.
Oh, that one, okay.
What's top of mind for you?
Top of mind is going to be the signaling in the press conference. As we kind of look at the meeting statement from the prior meeting and think of what needs to change at this meeting, it could be as little as the date stamped on the meeting statement. So it's all about the press conference and the kind of signaling towards what they'll do in December. And knowing Jay Powell and how he operates, I don't see any reason for him to get out in front of this.
Is he going to use the word pivot?
The market is close to 50-50 split between 50 and 75 at the December meeting.
Okay.
And I think he's going to let the data do the talking. So he'll say there's 2 more jobs reports, 2 more inflation reports, 2 more rounds of inflation expectations data.
Yeah.
And so, we will look at, using his word from the last meeting, the totality of the data and determine. He'll say that at some point, right, we can't do 75s forever. There will be a point where it is appropriate to downshift. It may be December, but we're not sure yet, and we'll base our decision on the upcoming data, right? The Fed has made it very clear this year they are acting on realized data, not forecasts.
Okay, Carl, there's a difference, though, between downshifting and pausing rate hikes.
Right.
So just help us understand the environment that we're entering in 2023. Do we go to one where we continue to see rate hikes of 25 basis points or 50 basis points at meeting after meeting, or do we just get to a point where the Fed reaches the terminal rate, and I would love to hear what you think the terminal rate is going to be, and leaves it there for what, how long?
Well, the level of rates matters relative to the growth rate in the economy. So if we look at GDP right now, we're growing at about a 9% pace. The Fed funds rate is far below that, right? So it's not as restrictive as it might seem, but we see that growth is decelerating sharply. The housing sector obviously heading into a pretty significant contraction, maybe a 25% annualized decline in the back half of this year. We see the factory sector starting to respond to the strength in the dollar, which has crimped export demand and whatnot. So we see more parts of the economy starting to creak as Fed tightening weighs in on the economy. Our baseline view is that we will get another 75 basis point hike at the December meeting, another 50 basis points in the first quarter of next year, probably at the February meeting. That gets us to a terminal Fed funds rate of 5.25.
Wait, so 75 this meeting,
75 in December.
Got it.
And then 50 in Q1, probably 50 at the February meeting.
Okay.
Right? It could be 25 between February and March, but we don't
So
want
they're
to
starting
we don't
to,
want to
like,
forecast
trip.
around two corners. So the downshift is coming, maybe
Yeah.
not in time for December, but with the Fed funds rate north of 5%, unfortunately, I have to use that R word on your program, Carol,
Recession.
and we think that this means recession in the first half
Are
of
we
next
there
year.
already?
We're not there already because we
Okay.
still have positive income growth in the economy. We're creating positive monthly gains in employment, which is a very important barometer of recession. So we're not quite there yet, but things are slowing, and I think this will become more evident when we see payrolls on Friday and over the course of this quarter, and especially as we get into Q1 of next year.
What would be recessionary about payrolls on Friday? I mean, we're guessing 195-ish right now.
Right. So
for
if we're close to,
economists.
what's recessionary about that is the direction of travel. So I'm at about 215,000 on that forecast, but we're cooling from a pace of 400, 500,000 per month earlier this year. So if we extend that trend,
Right.
it doesn't become recessionary necessarily in Q4, but by the first part of next year, then we're getting into the realm of a negative payroll print coming. And where there's one, they're like cockroaches. There will be multiple, and that probably means that we've slid into contraction. And just the last point I would add to that,
Sure.
consumers have been surfing on a wave of excess savings, right? This has propped up consumers, even while inflation is high, to levels of performance and consumption that wouldn't otherwise be possible.
They're still working
But
down the money.
those
that they-
savings are, poised to run dry, so to speak,
Yeah.
in the first half of next year, right? We're burning through about $1 trillion of excess savings per quarter.
Wow.
We started at about, just north of 2 trillion. And so, just use that math, and that shows you that the tank runs on the fumes in Q1 of next year.
Hey, Carl, one of the big discussions we've been having, like on the other side of this, as we get our way through this Fed cycle, should we just, as a civilization, just say, hey, inflation's going to run a little bit hotter than it has traditionally because of things that are going on more broadly, strategically, and fundamentally? About 30, 40 seconds
I
here.
think we're in a regime shift on inflation where a lot of factors, whether it's deglobalization or moving away from petroleum and whatnot, carbon-emitting fuel, energy
Aging
sources, demographics, all of these things could mean higher inflation. But if the Fed is focused on getting it to 2%, that just means there will be a more restrictive Fed response. So we said recession next year. Typically in recession, the Fed is the white knight riding to the rescue, cutting quickly and aggressively.
Yeah.
I don't think we can count on that to happen this time around. They're going to keep a foot on the brake pedal to make sure they wring the inflation pressures out of the system.
Yes or no? The Fed still thinks 2% inflation is real?
Absolutely. They are not abandoning that target anytime soon.
Got a ways to go.
That would
Or
be
they
it.
will risk
That would
the
be a pivot.
chagrin of the U.S. Congress if they do.
That would be a pivot. Carl Riccadonna, so great to see you.
Sure
Chief U.S.
thing.
economist at BNP Paribas, joining us here in studio.
Bloomberg Interactive Broker Studio in New York. Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, you are listening and watching Bloomberg Business Week on this Tuesday. Watching shares of Tesla, they were up more than 4% at one point today, holding on to a slight gain of about 1%.
Is it one of your gainers? I sent it to you this morning. It said
No,
Tesla would
I
be a
actually,
good gainer.
sorry.
That's okay. No, it's probably a good idea you didn't do it.
There's a lot to choose from today. Anyway, we're going to talk about Tesla because there's a few headlines and stories. Ooh, excuse me, that we think you want to do.
Let's get on over to Charlie Pellin because, Charlie, we got less than a half hour to go.
Let's just hope that Carol is okay.
She's taking a drink. She's fine.
Very good. We have got the Dow, the S&P, NASDAQ, all declining right now. 28 minutes to go, as you mentioned here. We have got the S&P lower by 13 points, down by about 0.35%. The Dow lower by 74 now, decline there of 0.2%. NASDAQ down 90, drop there of 0.8%. Stocks are off session lows, but they are struggling to improve much further. As data showing a solid labor market bolsters speculation that Fed policy could remain aggressively tight, even with the threat of a recession. 10-year yield right now, 4.06%. 2 years at 4.54%. Bitcoin today up 0.3%, 20,455. Spot gold up $13 the ounce to 16.47, up 0.8. And West Texas Intermediate crude up 2% right now, 88.27 a barrel on WTI. Federal Reserve policymakers have begun their two-day meeting with another jumbo rate hike considered to be a done deal, but there is plenty of speculation about when the Fed will begin to decelerate its pace of monetary tightening. Victoria Fernandez is chief market strategist at Crossmark Global Investments.
The Fed, in our opinion, is nowhere near the end of raising rates. They're going to continue to go. Whether it's 50 or 75 in December, we'll see what the data tells us. I think they're going to continue to raise rates in the first part of next year. So I'm not even looking for a pause until maybe spring of next year. And then we know they're going to hold rates there for a continued period of time.
And again, the Fed decision, 2 o'clock Wall Street time, and Jay Powell's news conference live on Bloomberg Radio, 2:30 Wall Street time. Uber Technologies is reporting revenue that beat analyst expectations, fueled by a recovery in driver supply. We've got shares of Uber driving higher, up by 12.4% right now. Rival Lyft, which reports next week, up right now by 4.1%. I'm Charlie Pellet. Carol Massar, you okay?
I'm doing better. I'm doing better. Drinking water.
We got a big support team of
Yes.
me throwing some water over to Carol.
A splash. All right, you're listening and watching Bloomberg Business Week. Carol Massar, Tim Stenovic, good to have you back here. I know it's been a lot of stuff going on. We're live in our Bloomberg Interactive Broker
I was
Studio.
trick-or-treating yesterday.
Streaming on YouTube. Were you?
Yeah.
Did you have a costume? You did have a costume.
Yeah.
I saw it.
We were Sesame
I saw the
Street. It
picture.
was great.
It's really sweet.
We had a good time.
I wonder if Elon Musk is into costumes.
That's a good question.
Maybe I don't want to go there.
We're going to talk all about EVs and what's going on in the industry. It's Bloomberg Plugged In, your weekly look at EVs, brought to you by Audi. Don't let someone else drive off in the Audi model you've always wanted. Visit your local tri-state Audi dealer to get behind the wheel of yours today, or visit AudiOffers.com for more information.
All right, let's get to Ed Ludlow in our Bloomberg Plugged In weekly segment. Ed, of course, is West Coast correspondent at Bloomberg News. He's in our 960 studio in San Francisco. So, Ed, good to be checking in with you on Tesla. I mentioned stock way off its highs of the session here, but up about 1/3%. Let's start with this story about Tesla. It looks like it's pulling in workers from China to its factory in California. What's going on?
Yeah, this is really interesting. So Bloomberg reported overnight, according to sources, around 200 controls and automation engineers from the Shanghai plant are making their way to California for 3-month stints to try and basically improve things that are going on just the other side of the bay from where I'm sitting. Remember, Fremont was Tesla's kind of first big plant. Shanghai is the middle plant. It's not the newest. The plants in Austin and Berlin are newer, but Shanghai is kind of the crown jewel, the biggest. And controls and automation engineers are the talent that power the machine that powers the assembly lines. And, you know, Fremont has been constrained by its size. It's kind of a Frankenstein's monster of an assembly plant that they've put together over the years. Do you guys remember the tent?
Oh,
Do you
yeah.
guys have any
Can't
memory
forget
of the tent?
Yes.
Isn't that where
Right.
Elon lived?
So they put up this tent outside Fremont because they just ran out of space in the main factory. But what we understand from sources is that the factory's capable of doing around 650,000 units a year. They're trying to find ways, smart ways. This is classic Tesla ingenuity to pump more EVs out of that California plant using talent from that Shanghai plant.
So is what works in China going to work in Fremont, California? Ed, I got to tell you, I see a story like this. I think back to this documentary that I saw. It came out in 2019. It's called American Factory. It's on Netflix. And it's about this Ohio factory, and a Chinese company buys it, and it's about the culture clash that comes in. And I'm just wondering how this plays out in Tesla.
Yeah, the culture clash is an interesting angle. You have to remember that what they did in Shanghai is just frankly unbelievable. You know, the speed at which they not only built the plant but made it operational and then expanded it. You know, it's nearer to producing 1 million vehicles a year than it is its stated production capacity of 750,000. It is the Tesla way to kind of improve processes and then share those ideas around the world. The hope is that every time they build a new plant, that it's a vast improvement on the last one. What they're doing here is going back to the original and saying, come on guys, there must be a way we can eke out more here. And those controls and automation engineers, these are highly specialized roles. They understand the computers and the controls units that power an assembly line, and it's all about coding and maximizing for efficiency. This is great geeking out stuff, but the end result could be really beneficial to Tesla's bottom line. And if you're a consumer, think about how long you've had to wait to get yourself an EV that's built in, you know, I think April 2023 is the current wait time for a California-built Model Y. For many, that's unacceptable.
Yeah, I love this. The uptick in production has contributed to shortening wait times for Tesla in China to 1 to 4 weeks from a peak of as long as 22 weeks earlier this year, according to Tesla's website. So, yeah, they've got to be looking at those numbers and being like, okay, how can we do this better? All right, one more story we want to get to. Talk to us about the Tesla Cybertruck.
So this Tesla Cybertruck is like this futuristic, long-awaited pickup truck. I was there in November of 2019. Elon Musk is on stage with the design chief. They throw a big metal ball against the window. The window breaks when it's not supposed to. You guys remember the story.
Yeah.
And ever since then, we've been waiting for this thing to go into production, to be real, and it's been pushed back multiple times, but Reuters actually reporting overnight that it will go into production in late 2023. And in pre-market trading, at least, it really boosted the stock. You know, there's a lot of excitement around this product. Remember, Tesla's got some catching up to do. Rivian already has its pickup truck. Ford has the F-150 Lightning. GM is coming to market with its own pickups. For our YouTube audience, you're looking at video of this just edgy, boxy, cyberistic monstrosity, many people would call it. I mean, don't laugh, Tim.
Don't they have something like, I don't know, if you go around Google, you look at stories, do they have like over 3 years worth of Cybertruck orders?
The backlog is huge. The demand for it, the initial enthusiasm was huge. You know, the questions remain, will it be as it was previously advertised? Will the production version actually look like that?
Yeah.
And second of all, how long do you really have to wait to get this thing? Because as we know, launching and scaling a product isn't always smooth.
All right.
It'd be good for you tooling around Brooklyn.
No, I saw Rivian in Brooklyn yesterday, by the way. We don't see those often here in New York. Ed Ludlow, West Coast correspondent for Bloomberg News. Thank you so much for the update. Let's get on over to Nancy Lyons, who's standing by in Washington, D.C. with a 991 Newsroom update. Hey, Nance.
Thanks, Tim. The Supreme Court is declining to block a subpoena for Senator Lindsey Graham in a Georgia probe of alleged interference during the 2020 presidential election. Atlanta Area District Attorney Fannie Willis is investigating phone calls Graham made to Georgia election officials. The Supreme Court is temporarily delaying the release of former President Trump's tax returns to Congress. Chief Justice John Roberts today stopped the IRS from turning over the records to a House committee investigating how the agency audits presidential tax returns. Bloomberg's Washington correspondent Joe Matthew has more on the purpose of gaining those returns.
This isn't just for an expose. It has to be for the sake of crafting legislation. The Ways and Means Chair, Richie Neal, says, yeah, we're going to make legislation that shows how accountable presidents must be. But we need to see his tax records first.
Again, Bloomberg's Joe Matthew. The man accused in the attack of Paul Pelosi, Speaker Nancy Pelosi's husband, is due in court this afternoon to face federal charges of attempted kidnapping and assault. Former RNC Communications Director Doug High is the former tells Bloomberg it was wrong for the party to start the Fire Pelosi campaign.
I don't draw a straight line to the Fire Pelosi campaign from 12 years ago to what happened to him. You can certainly draw a crooked line. or a dotted line to it. And as we see so often, our rhetoric is getting hotter and hotter.
High writes about the rise of toxic politics in a Washington Post editorial. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Carol Master along with Tim Stenovic on this Tuesday here on Bloomberg Business Week. Interesting story, sign of the times. You cover crypto left and right, and we really continue to see the fallout.
We talked about this on Bloomberg Crypto this afternoon. This is all about Galaxy Digital Holdings, the crypto financial services firm founded by billionaire Michael Novogratz. It's exploring eliminating as much as 20% of its workforce against the backdrop of a digital assets market downturn.
Yeah, the plan under consideration could still be changed. The final number could be in a range of 15% to 20%, according to people familiar with the matter. The company reported 375 employees globally as of the end of the second quarter, which would mean as many as 75 positions could be eliminated. That's a lot.
Yeah, here's what Galaxy spokesperson Michael Worsthorne said, quote, "We are always considering optimal team structure and strategy and will share future plans when finalized. While our industry continues to face macroeconomic headwinds, Galaxy remains focused on building for the future state of institutional adoption and on enhancing long-term shareholder value."
Yeah, it's interesting, though. But, you know, going back to the crypto element, you talked about it on TV on our crypto show earlier. Galaxy shares down 70% this year, in line with many of the most popular currencies. I mean, they've had tremendous exposure.
They have, and a big part of the reason, well, I wouldn't want to say the reason shares are down, but some of the exposure that's concerning investors is Novogratz's backing of Do Kwon's Terraform Labs. It was the company behind the failed Terra and Luna tokens. In July, Novogratz acknowledged that he was, quote, darn wrong about the magnitude of the leverage in the system. But as Kaylee reminded me on air today, Novogratz has a tattoo of the Luna stablecoin.
So what does that mean?
Or the Luna token, I should say, excuse me.
Was that to show you?
No, he got that before. That's how much he believed in it.
Well, and what's interesting is, you know, you got to check out Matt Levine's story because it digs into this. Like, it just pulls in everything that has happened to crypto in this grand conversation when it comes to cryptocurrencies and understanding what's going on. And he touches on this as well and what happened.
Yeah, it'll be interesting to see what ends up happening at Galaxy Digital.
I know.
And what we see from other firms, too, in the space.
I mean, crypto, many who say, really smart folks, they were really early in on this game. And so, you know, the payoff potentially is maybe yet to be known.
stocks, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got 13 minutes to go ahead of the closing bell with the Dow, the S&P, and NASDAQ all in the red, on track for a losing day here, with the S&P right now down by 0.3%, a drop of 12 points. Stocks struggling to improve as data showing a solid labor market bolsters speculation that Federal Reserve policy could remain aggressively tight, even with the threat of a recession. The Dow lower by 59 points. That is a drop right now of about 0.2%. NASDAQ down 87, a decline of 0.8%. The 10-year yield 4.06%. Looking at a 2-year now of 4.54%. Spot gold up $14 the ounce to $16.47, up 0.9, while West Texas Intermediate crude up 2% today at 88.24 a barrel. Ton of earnings after the bell among some of the names scheduled to report: Cirrus Logic, AMD, Airbnb, Electronic Arts, Mondelez, Match Group, and MicroStrategy. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
This editorial was written by the Bloomberg editorial board. The migrants known as dreamers, who were brought to the U.S. as children, have long lived under the threat of deportation. With the midterms looming, lawmakers may not get another chance to protect them. The DACA program allows these undocumented immigrants to study and work legally in the U.S. DACA households pay billions in taxes, but still lack clarity about their legal status. An impending court ruling could immediately revoke some enrollees' right to work, which would be devastating for businesses too. The House has already passed a bill that would shield DACA recipients from deportation and given them a path to citizenship. A bipartisan effort in the Senate would do much the same. The drama has gone on far too long for the dreamers and the families who live in fear. This editorial was written by the Bloomberg editorial board. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPIN Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, just under 10 minutes until we ring the closing bell on this Tuesday session of trade. First trading day in November, and we are seeing stocks off their worst levels of the session, but pretty much down across the board. So let's get to it. Our Drive to the Close guest is with us.
We got Amanda Agati with us, Chief Investment Officer at PNC Asset Management Group. She joins us on the phone from Philadelphia. I always think of the 12 rings of Christmas when I think of Amanda Agati, because
it's not so far away.
It's not. That's what I was going to say. Now that we're in November, we're going to get closer, and I don't want to know what inflationary things look like this year. So stay tuned for around Christmas time when Amanda comes back. But before we get there, Amanda, we have got a long way to go because we got a Fed meeting that has kicked off today. We hear from Fed Chair Jay Powell tomorrow. Markets were very optimistic in October. What's top of mind for you right now?
Well, thanks so much for having me. We're definitely excited to share the insights from the Christmas Price Index, so I'm looking forward to that conversation. But the thing that's certainly top of mind right now is ultimately what the Fed does in terms of action items here and also in terms of forward guidance. And so I think from our perspective, 75 basis points is pretty much a foregone conclusion in terms of the action item coming out of the meeting. But what isn't entirely clear is the guidance that they're going to provide, or ultimately, where the end state for monetary policy ends. And, I could talk all day about, the still somewhat solid underlying fundamentals, the health of the consumer, what's going on in credit markets. Even some of the economic data today looked okay-ish. But I think the only thing that really matters in terms of the path forward is what the Fed does.
Well, no, it's a really good point. Well, how would you assess what you're seeing in terms of the economic backdrop and market backdrop and what that means and what that portends for corporate earnings going forward. We're still, of course, going through earnings, but what it means perhaps going into next year.
Yeah, so, I mean, in terms of the economic data that came out today, there's clearly some slowing and some settling, prices, levels coming down. And it's really a reflection of the Fed doing what they're trying to do, right? They're tightening financial conditions, they're slowing down the backdrop. But the frustrating part about this is for as aggressive and hawkish as they have been in terms of these consistent outsized rate hikes, it hasn't really made that much of a difference in terms of the inflationary backdrop. We haven't made that much progress. And it comes back to this idea that there's a perfect storm of headwinds swirling here that the Fed's policy tools in the toolkit really aren't effective at combating. And
can you talk about some of those? Amanda, sorry to jump in. I just want you to talk about some of those specific headwinds here that have you concerned, because it does seem pretty puzzling that despite, well, not puzzling because we know this stuff takes time, but I think frustrating to a lot of people that where we see.
Right. So some of the challenges that we're seeing are certainly, as it relates to the pandemic itself and the grip that it continues to have, even though it may feel like we're kind of getting back to normal business as usual pre-pandemic, there's still a grip there in terms of the pandemic itself, and it's showing up in the flickering on and off and lockdowns as it relates to China and other parts of Asia. There's still some pretty significant supply chain disruptions. We certainly have Russia and Ukraine applying a ton of pressure on commodity prices and energy prices in particular. Just because the Fed raises rates or tapers their balance sheet at a more accelerating rate, does that have any impact on those key variables? So I keep coming back to this idea that there's a perfect storm here that's driving inflation here. And so, the Fed continues to raise rates, but I think we're getting to a point where we're not in overly restrictive territory, but we can easily tip into that place. And we ultimately end up with still elevated inflation in the backdrop.
All right, so what do? We've got money to put to work, or we're just trying to protect our assets. What do we do in this environment, Amanda?
Well, there's no question the valuation multiples have responded accordingly to the challenges that we've been facing this year. So from a valuation perspective, it definitely looks more attractive on a relative basis today than where we started the year. But we're still playing quite a bit of defense. The contrarian in me wants to start getting excited about new investment opportunities at major inflection points in the cycle. That's really where opportunities are born. But we're still playing quite a bit of defense here in the short run until we can get a better handle on how far and how fast the Fed is going to continue to move from here. So from our perspective, you got to go U.S. over international in terms of positioning, larger caps over smaller, and then we've effectively neutralized our growth versus value bet in equities. That one has been really challenging, kind of the pendulum swinging back and forth between growth and value all year. So that one hasn't really paid to kind of pick sides in terms of positioning in the path forward.
Amanda, when are we going to start to see some good news here? I got to tell you, I'm feeling a little pessimistic after hearing from you. It's which is fine. I mean, it's your take on the markets. But when if we help us look forward to 2023, is there any optimism that you have?
So I don't want to be overly bearish sounding. I think it's just important to be a little cautious here at this point. I'm already getting my Christmas wish teed up for Santa here, and it's sort of the impossible thing, but I'm hoping for a December Fed pause. I don't think that I'm actually going to get it. I think my gift will get lost in supply chain disruptions. But I think, honestly, I keep coming back to this idea that the single most important variable for the path forward is where Fed policy ends. It's not so much one individual meeting or another. It's where that end state or terminal rate for monetary policy lands. And I think if we stop short of where the dot plot suggests the Fed is headed, we still have the potential to avoid recession. It's not a foregone conclusion at all. It just comes back to what the Fed ultimately chooses to do.
Well, it's an interesting time, that's for sure. Amanda, thank you so much. Amanda Gotti, she's Chief Investment Strategist over at PNC Asset Management Group, joining us on the phone in Philadelphia, and just taking a look at the equity trade with just about 3 minutes to go. S&P 500 just down about 12 points, so down 1/3 of 1%. Call the Dow essentially flat on a percentage basis, down about 2%. No, forgive me, 0.2%. That's a big difference. Down about 67 points. And the NASDAQ down about 91 points, down 0.8% here. And yeah, that's kind of the trade. Not surprising with the Fed. We're going to get that Fed decision tomorrow. So investors maybe just pulling back just a hair.
You thought about your question for Jay Powell yet?
Nope.
Yeah, neither have I. We still got, 22 hours.
Yeah, I mean, I just, what kind of clarity do we have longer term? And we'll see how much he's willing to go out on a limb to say, here's what comes next. Or does he just stick to this meeting and say, hey, folks, we're
All right, don't go anywhere.
All right, time to head over to our Bloomberg TV colleagues for Beyond the Bell, live on radio, TV, YouTube, and on Bloomberg Quick Take. We're counting you down to the close.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Caroline Hyde, Taylor Riggs counting you down to the closing bell. And it'll help take us beyond the bell. It's our global simulcast with Carol Massar and Tim Stenovic. We welcome our audiences across all of our platforms, Bloomberg Television and Radio, as well as on YouTube and Quick Take. And Carol, an interesting day here where we came out of the gate. It looked like we had a rally on our hands, but it looks like some of that might have been a little bit distorted by some of the activity in the options market and folks just kind of trying to pick up a few short-term trades.
Yeah, there's certainly not a lot of enthusiasm, or at least a bullish tone, not at all at this point with just a few minutes left in today's trade. However, if you are in the energy sector, once again, continues to be an outperformance. We saw a kick up when it comes to WTI crude futures up more than 2%, and you saw that certainly play out in the equity trade. Again, Tim, it goes back to some of that speculation of a Chinese economy reopening, but keep in mind you've got ministers and oil global giants meeting in Abu Dhabi this week, so we're watching for some of the headlines out of there.
We just had a great conversation with Amanda Agati, the Chief Investment Officer at PNC Asset Management Group. She said she doesn't think it's going to happen, but she's already thinking about her Christmas wish list. She wants a December Fed pause from Santa Claus.
One day
If I
after
hear
Halloween,
one more
trick or
day.
treat, and one more Christmas analogy, Tim. I'm going to boot you
Did you
all
not dress
the way
up?
back
You did
to
not dress.
Cali.
You did not dress up.
What did you dress up as,
trick-or-treating? I was Cookie Monster. Thank you for asking.
I saw some real live Care Bears out on the street yesterday. It was
What's
cute.
old is new again. It's like industrials versus growth. We're all going back to the good old 80s and 90s. But I mean, it is notable that we're talking real macro today, but we are still waiting for the micro, for the nuances coming from some of those CEOs after the bell.
Yeah, we're going to get a few of them in just a second. Meanwhile, let's walk you through the closing bells. Before that deluge comes, the Dow Jones Industrial Average lower on the day, roughly about 80 points or so as we wait for these numbers to settle. That's going to be good for a loss of about 2 to 0.3%. The S&P 500 lower by about 16 points or 0.4%, while the NASDAQ Composite going to finish lower by 0.9%. One of the few bright spots today, and really for the last few days, has been what we've been seeing in the small and mid-cap space. The Russell 2000 higher on the day by 0.2%. S&P 400 mid-caps higher by 0.4%.
All right, quick in terms of the S&P 500, kind of an even split here, guys. 281 names higher on the session, 220 lower, Taylor, and 2 unchanged, so kind of right down the middle, almost.
Interesting, though, today you actually have green in the best performers and red in the worst performers. In the green, it's banks and energies and some of those durables that continue to be the outperformers on the day. And then, of course, we go down to the bottom of the screen, and this is continuing to be the story. It's software and services, technology, hardware, media, and entertainment. Those are the worst performers on the day. You're off about 1 to even 2.5% or so.
All right, let's get to some of the individual gainers, if I may. Uber, certainly a standout. It was up about 12%. That's after that third quarter revenue beat, strong ridership. Wynn Resorts, also a standout, continuing to move higher over the last 3 days, gaining another 6% today. Tillman Fertitta, of course, the stake yesterday. You've got also any of these gambling companies with exposure to Macau. There's continued optimism, Romaine, as you know, when it comes to the
and I just want to point out quick, I mean, since you're mentioning Wynn Resorts, the Caesars actually crossing the wire. A nice little beat here, at least on the top line number. We haven't actually dug into the release, but it gives some sense here that some of those companies in that travel and discretionary space are holding up pretty good.
All right, well, we're rating many companies reporting. I do want to go through some of the decliners that we hear. Amazon shares are down today by more than 5%. The company, now we're actually seeing the company down for 5 days in a row. It actually closed below $1 trillion in value. Apple shares are also taking a hit, down 1.8%, down about 3% in change since Friday's close after it reported earnings. And we saw shares move higher. And Catalent falling 24.6%. I do want to jump in and talk about about Electronic Arts, EA. We're seeing shares move in the after hours. They fell initially, but are now just about flat. The company says that it sees fiscal year net bookings coming between $7.65 billion to $7.85 billion. That is really light. The company saw $7.9 billion to $8.1 billion. The company does, though, maintain its quarterly dividend at 19 cents per share. The company net bookings for trailing 12 months was at $7.38 billion.
Wonder how much of an FX impact there is in Electronic Arts. Let's have a quick look at what the FX space meant for today. I'm not sure if I'm bathed in that much light. We're going to bring, there we are. We're looking at the moment at what a pretty relatively strong yen and a strength in the New Zealand dollar. This on the back of hopes and prayers and rumors around the fact that maybe China will be more of a reopening story post-COVID. At the moment, we are still seeing a weaker dollar index. Notable, though, that we came off of those lows as we looked and digested that JOLTS data and the fact that there's still so much strength in the labor data here in the US that the Federal Reserve isn't going to be able to take its foot off the brakes as soon as we anticipated. Commodities, we saw gas markets fall in Europe, warmer weather, similar echoes here in the US, off by 8% for natural gas. Brent crude, WTI lifted higher on those rumors that China could be more of a focus on growth, more of a focus on reopening. But remember, they are rumors, not facts. And looking at sovereign bonds, which saw the 30-year yield push up in Japan, for example, but we saw really a mixed picture. Gilts, for example, being bought on the 5-year over in the UK, Taylor.
Yeah, it was really a mixed picture here within the US as well. Remember, we started the day with yields lower all the way across the board, and that picture changed about midday. The 2-year and the 5-year yields are rising. You're now up to about a 454 on the 2-year, up 6 basis points on the day. But buying bonds yields lower on the long end, Romaine, and maybe that hints of that lower growth, lower inflation on the horizon. But the key focus, again, continues to be the front end of that yield curve with a big focus on the Fed tomorrow.
Yeah, and you talk about stocks kind of in that holding pattern as maybe they will potentially get a little bit of a signal as to whether we get a slowdown in some of the pace and the severity of these rate hikes starting in December and going forward. I do want to just circle back real quick to Tim, to something you were bringing up and Amazon. And this 5-day stretch, I was just taking a look. That's a 20% drop over the last 5 days here, just in that stock alone. Of course, it's always been well off the highs that I think it hit back in July of last year. But that's, first of all, that's the biggest 5-day decline that we've seen for the stock going back to 2008. But also coming out of that $1 trillion club, we talked a lot about that, I think, on Friday here, but how we're seeing more and more of these companies sort of whittled off from sort of those really sort of massive market caps. And it really just leaves what Apple and Microsoft and Saudi Aramco.
Well, and you do think about, again, continuing to see kind of as we come out of the pandemic, some of these companies that just were on fire. You know, I'm thinking about Clorox. We're waiting for the earnings to come after the closing bell. I mean, everybody was buying disinfectant, and they just kind of took off in a big way. But we've certainly seen a
I still
reset.
am, by the way.
Well, I'm
I was on the plane the other day, and I think I was the only person wearing a mask. So I'm the idiot. So.
But would you? I mean, but in all seriousness, did you clean the surface around you? And you did. Okay,
yeah, so,
good.
yeah.
But that's what's that's what's so different about where we are. 2 years later, Caroline, in the pandemic. But go back to what Romaine was saying about Amazon. If we think about what happened last week and the concerns about the company has about the current quarter and the consumer, that's a serious issue for the company.
Let's look at some of the earnings from what were darlings or beaten up during COVID and then came back to be darlings. We've got Airbnb seeing fourth quarter revenue at $1.8 billion to $1.88 billion. That's basically where the market had been looking for. $1.86 billion had been where the market was. We're seeing the forecast for just higher than that. But we're seeing a third quarter earnings per share come in higher than expected, $1.79. The market wanted $1.53. They're seeing gross bookings value at $15.6 billion. Again, that's a beat. The third quarter revenue at $2.88 billion, basically in line. Nights and experiences booked, $99.7 million. Though that is just shy of expectations. So maybe that dialing back of the actual nights that were booked in the third quarter, a little bit of a concern there. We want to dig into some of the commentary in the business as to whether they are seeing a slowdown in the consumer and also, of course, an erosion in market share as we see inventory come back online from hotels and some of the other competitors.
Let's take a look at shares of Mondelez as well, because we're getting those quarterly results, and frankly, they look better than expected. You're looking at third quarter net revenue from Mondelez, $7.76 billion. Estimates had been for $7.4 billion. And adjusted gross margin, 37.4. Estimates had been 36.9. And that means an improvement all the way down at the bottom, 74 cents versus 69 cents. Romaine, we go through the press release and they talk about resilience within the snacking category, a huge strength within their brands.
Yeah.
Stop eating all of my
resilience in the
snacks.
snacking
Your vegan
category.
Oreo.
So, right. I don't think snacking is ever going to go out of style. Of course, Oreo is never going to go out of style either here. It'll be interesting to see how resilient some of those names are. I'm a little surprised, though, and I want to go back to Airbnb, Caroline, because I'm a little surprised that we didn't actually see a little bit more strength in some of those booking numbers and revenue numbers, because that really was the bright spot. It was not only just people traveling, but of course we have a lot of anecdotal evidence that a lot of the sort of, if you will, are we allowed to say it, the work from home people were sort of, renting out these Airbnbs and whatever sort of desired location, and that was actually a big driver of some of those bookings as well.
And that's, yeah, go ahead, Caroline.
But sometimes we get so caught up with whether they meet or beat. It is notable that Airbnb did post its most profitable quarter to date. It did just have record revenue overall. It's just whether or not it's at the extent that the market wanted to see it and the forward-looking expectations.
But it's slowdown, though, too. I mean, when we talk about the guidance going forward, I mean, now you have to start talking about a high-growth company to maybe a slightly less high-growth company.
I want to jump in because Taylor used the word resilience when talking about Mondelez's results. Resilience also a word that EA is using when it comes to their own business. The company's saying that our resilient business model, disciplined execution, and healthy underlying fundamentals are poised to deliver long-term growth. When we go back at the end of the quarter and look at the words that these companies used in press releases, I wonder how many times they're going to use the word resilience in the context of the economy.
Is Electronic Arts, those videos, is that resilient? I mean,
I don't know.
Chips
I think,
Ahoy are resilient.
Some
Oreos
analysts going into this were concerned about
I don't know what the vegan version of that. Honey Maid, how about that? You can eat those, Kurt.
Oreos are vegan.
Philadelphia cream cheese, that's resilient. Ritz crackers, Sour Patch Kids.
Do you have lunch?
No.
No.
I'm getting hungry looking through these brands here.
Mondelez,
Look at this
by the way.
Toblerone. Remember those Toblerones? Oh my gosh, I used to love those.
We had those here?
You were just on an aeroplane, Romaine. You should have brought us
Yeah.
some back Toblerones.
I did. I bought you back Seeds
All right, that's
candy.
a wrap.
That's regional.
Are you done, Romaine?
No.
All right.
But I think we have to go.
Yeah, I think we do. All right, that's a wrap. Our cross-platform coverage on Bloomberg Radio, TV, YouTube, and of course on Bloomberg Quick Take. We call it Beyond the Bell. We will see you again, same time, same place tomorrow.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, so a bunch of earnings, kind of a mixed bag, right, in terms of
Is that a new
different
snack from
sector.
Mondelez? Mixed bag?
I know, it should be, right?
Yeah.
It's kind of a little bit of everything.
Yeah, we got Airbnb, we got EA, the list goes on, and we're going to get more as the time after the bell continues. Clorox, we're still expecting. Let's get to World and National News. 99.1 studio in Washington, D.C., we find Nancy Lyons. Hey, Nance.
Thanks, Tim. Well, Supreme Court is temporarily blocking Congress from getting former President Trump's tax records. This comes a day after Trump's attorneys filed an emergency application with the Supreme Court asking for that delay. And the Supreme Court today cleared the way for Georgia prosecutors to question Senator Lindsey Graham before a grand jury. The action pushes forward an investigation into efforts by Donald Trump to undo his election loss in the state. President Biden is campaigning for Democrats in Florida, and he's warning if Republicans gain control of Congress, it puts Social Security and Medicare at risk.
Those are more than government programs. They're a promise we made as a country to work hard and contribute. And when it comes time to retire, we're going to be there for you.
Today in Georgia, former Vice President Mike Pence was on the stump with Georgia Governor Brian Kemp, who is in a tight race with Democrat Stacey Abrams. Pence called it the most important election in our lifetime. Victims and family members of those killed in the 2018 shooting at Marjorie Stoneman Douglas High School in Parkland, Florida, have been speaking out in court today about their experiences ahead of the formal sentencing of shooter Nicholas Cruz. Teacher Stacy Lipple is a survivor.
Because of you, I check for all exits wherever I am. Because of you, I think of the worst case scenario for myself and my family. Because of you, I will never feel safe again.
Again, that is teacher Stacy Lipple. Cruz will be sentenced tomorrow to life in prison. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. Carol Masser along with Tim Stenovic here on Bloomberg Business Week. And just watching some of the earnings that just came after the closing bell. Airbnb under pressure, down about 7% here in the aftermarket. The company seeing a slowdown in bookings as pandemic trends are shifting. Third quarter results showed record revenue, biggest profit, travel pivoting back to pre-COVID urban cross-border sites. So, you know, this is a big thing, I think, whenever we look at anything, that our world is still making the transition from pandemic to post-pandemic life. We're not there completely.
We're not there completely, and I mean, just look at the way that Amazon's shares have come down since we're flirting with April 2020 lows. Carol, think about what we were doing in April of 2020. We're seeing almost every company come back and give and essentially go back to what we saw during the pandemic.
This is Bloomberg Radio.
So
on
the other part I wanted to focus on was electronic arts, because we're actually seeing shares down of electronic arts in the after hours right now. Now, Carol, they're up and they're flat. Now down about 3%. So after hours, trying to make sense of it. The company's seeing second quarter bookings at $1.75 billion, though. The red sticky, though, had to do with fiscal year net bookings. That was a miss. It came in at 7.65 to 7.85 billion.
Right.
It saw for the year 7.9 to 8.1.
All right, I want to mention Clorox. They just crossed the Bloomberg terminal as well, coming out with their latest earnings. Stock is up about 1.4%. They've been going through cost savings, restructuring. The company's CEO saying they will cut more jobs as part of that restructuring. They're keeping their outlook for the year, so they still see fiscal year adjusted EPS of $3.85 to $4.22 a share. The estimate on the street is $4.11, so potentially they could beat that. They see fiscal year net sales down 4% to down 2%. First quarter adjusted EPS 93 cents a share. The estimate on the street is 76 cents a share. So they're beating expectations, even as, despite what Romain says, cleaning demand wanes. I'm not buying as many Clorox wipes. I'm just telling you. We're just not.
You're not spending, like at the beginning of the pandemic, finding that one jar of Clorox wipes and spending $20 on it?
Nope, it's a reset. We're definitely seeing it. And we're still waiting for some earnings from AMD. We'll report them as soon as they cross. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Earnings fast and furious. We begin with Advanced Micro Devices. AMD now sees fourth quarter revenue in the range of $5.2 billion to $5.8 billion. Got to keep in mind estimates for AMD have been at $5.85 billion. Watching AMD after hours down now by about 1.1%. Again, those headlines crossing the Bloomberg Professional Service as I speak. We'll have more details as they become available. Airbnb says it sees fourth quarter revenue in the range of $1.8 to $1.88 billion. Estimates had been for $1.86 billion. We've got Airbnb after hours down now by just about 6.5%. Electronic Arts, the video game publisher behind franchises such as Madden NFL, cutting its forecast for net bookings. Electronic Arts EA down 2.6% after hours. Clorox sales and profit beat expectations. Clorox shares, they're cleaning up after hours, up now by just about 0.6%. The Dow, the S&P, and NASDAQ all decline right now. Decline today. Stocks did come off session lows, but struggled to improve much further ahead of tomorrow's Fed decision. S&P down 15, drop there of 0.4%. The Dow down 79, a decline of 0.2%. NASDAQ lower by 97, a drop today of about 0.9%. 10-year yield 4.04%. Spot gold up 0.8%, 16.46 the ounce, and West Texas Intermediate crude up today by 2% at $88.25 a barrel. Lots of earnings. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It is a lot of earnings, Charlie. You know what's missing, though? There's not a lot of deals being done. Although I should say J&J did a deal today.
Yeah, they did. It was a big one. Too.
Right, buying a Biomed for about $17.3 billion, $3.80 a share in cash. It was about a 50% premium to that stock's close yesterday before the deal was announced. But we have seen a flurry of Bloomberg stories just noting on how M&A has really slowed down this year.
Well, that's kind of, we see that in the markets. We see it with Fed policy.
Totally.
Really wondering what it portends for 2023. We've got a great voice on this. Mark Cooper is CEO of Solomon Partners. He joins us via Zoom from New York City. Mark, good to have you with us. How are you?
Doing great, and thanks for having me.
So it's not just us, right? A deal is not being done every day like it was in 2021. I mean, we're seeing that play out, and we're seeing that in the data. What to you is preventing deals from happening right now?
Well, first we should level set, because when you compare anything to 2021, it's like comparing it to the top M&A market in the history of modern times. So that's a very unusual hurdle to market. But if you look at it relative to 2019, call that the last clean year pre-COVID, we're doing okay this year. It's not a bad market. Again, last year was off the charts. I've been doing this for a long time, and I've never seen anything like it. So it's not as bad as some would believe. Having said that, has it slowed markedly? No doubt. Are there incredible headwinds, not the least of which are interest rates and the economy and future outlook of business that are causing pause for concern? Yeah, sure they are. But I think, as we've seen even this week, the M&A markets are here to stay and are active.
Well, okay, and that's fair because there are deals being done, and Elon finally put a ring on it with Twitter and got that done on Friday after several months. But what's interesting is
reluctantly,
I was going to say,
getting the courts involved,
dragged to the altar, as they say. But there is a darkening outlook, Mark, for deal financing, which is complicating the M&A backdrop. Talk to us about that and what's going on.
Again, so we say darkening outlook. It has darkened, and it's been that way for quite some time. And what you're referring to really is the public or the fully distributed debt market, the high yield market, as we call it.
Right.
And those are the ones underwritten by the big financial institutions that have traditionally financed the large transactions. That has been closed for months, and that won't reopen for a fairly long time. But yet, all these recent transactions are getting done, and they're not getting done with any help from the fully distributed markets. Look at the most recent transaction. that was announced, which is the deal for Emerson Electric.
Blackstone, right?
With Blackstone. So if you look at the structure, it was a significant amount of private capital. So as we know, one of the great changes in this go around in the M&A market is that there's an enormous opportunity to raise capital with private funds. Back in the last downward trend in M&A, which was back in 2008, that private capital market maybe was a couple $100 billion market. Now it's close enough to $1 trillion market, and they're doing deals. The second piece is people being creative, and in that case, Emerson came back and gave a seller note. So in other words, they financed a portion of the transaction, which is very, very smart, because all that means is that at some point when the market's rationalized and the high yield market comes back, which it will, they'll just refinance it.
Hey, Mark, we don't have a ton of time, so I wanted to make sure to jump in with this question about bankruptcies and distressed companies. When you look out across the landscape right now, what do you see there? Because we know that companies are tightening the belt, but what are we seeing in terms of distressed?
It's still modest relative to what you would think, given how interest rates have risen. And part of it is there's still pockets of capital that people can use, because it's all about cash. I mean, the only reason why, I know it sounds obvious, the only reason why you go bankrupt is if you don't have any capital. So one is there are still pockets out there that would reinvest. And number two is that many of the sort of distressed companies have fairly modest covenants. So it has to be a case where they simply run out of cash before they're going to have an issue with their lenders. But having said all that, it will rise, and the bankruptcy and restructuring world will increase, and certainly increase relative to what it's been, which has been nil over the past bunch of years.
Mark, really quick, 15 seconds. Does what you're seeing in terms of deal conversations, deal flow, speak recession to you? And you do need to be quick if you could.
It doesn't speak recession. It does and it doesn't. So on one hand, they want to invest in companies that are recession resistant.
Right.
On the other hand, they're going to put money to work.
All right, good stuff. Thank you. Mark Cooper, he's CEO of Solomon Partners, joining us via Zoom in New York City. You are listening and watching Bloomberg Business Week. Carol Massar along with Tim Stanovic, live on YouTube, radio, and on Bloomberg Quick Take. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, you are listening and watching Bloomberg Business Week on this Tuesday. Hey, coming up, we've got a great guest who worked for Alibaba, really an insider, and he's written a book about the company.
Yeah, Brian Wong, author and entrepreneur, is going to be joining us in just a minute. But first, a lot of earnings, a lot of price movement in the after hours. Let's go over to Charlie Pellet for an update. Hey, Charlie.
Well, hello there, and I thank you very much. We've got you covered on earnings. And by the way, here at Bloomberg, earnings, Fed, jobs, we've got you covered. We love doing that. Here's what's going on. Advanced Micro Devices, second biggest maker of computer processors. It topped third quarter earnings estimates, even while giving a downbeat forecast for the current period. After hours, AMD up by 0.6%. Again, though, stock has been moving between gains and losses. Airbnb out of San Francisco, as we continue with the Bay Area, delivered a disappointing outlook for bookings in the fourth quarter. Airbnb down now by 3%. MicroStrategy posted a loss in the third quarter after revenue fell despite Bitcoin reversing months of declines during the most recent three-month period. MicroStrategy after hours trading lower by 0.8%. Bitcoin today up by 0.3%, 20,461 on Bitcoin. Equity markets lower across the board today ahead of the Fed decision tomorrow and news conference. We've got you covered on that. The S&P down 15 today, down by 0.4%. The Dow down 79, drop there of 0.2%. NASDAQ lower by 97, down by 0.9%. 10-year yield ahead of the Fed decision, 4.05%. The 2-year, 4.54%. Spot gold up 0.8%, 16.46 the ounce. West Texas Intermediate crude oil up 2.2%, 88.41 a barrel. So it was a down day for the Dow, the S&P, and NASDAQ ahead of the Federal Reserve. What can we expect? Amanda Agati is Chief Investment Officer at PNC Asset Management Group, and she was our guest right here on Bloomberg Business Week.
I think from our perspective, 75 basis points is pretty much a foregone conclusion in terms of the action item coming out of the meeting. But what isn't entirely clear is the guidance that they're going to provide, or ultimately, where the end state for monetary policy ends.
And among some of the other companies reporting earnings after the bell, Electronic Arts, the video game publisher behind franchises such as Madden NFL, it did cut its forecast for net bookings. After hours now, the shares are trading unchanged. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. A lot going on. Charlie having it there in our Bloomberg Business News Flash. Hey, so how many times do you want to get a peek behind the doors of some of the world's best-known companies? How often?
Every day. Kind of what we try to do here.
I want to be on a fly on the wall everywhere. Well, you can when it comes to Alibaba, thanks to a new book. It is written by former Alibaba executive Brian Wong. He, by the way, was the 52nd employee to join Alibaba Group, and he was a former special assistant to Jack Ma.
We got Brian Wong with us right now. He's an author and entrepreneur. He's the author of the new book, The Tao of Alibaba, Inside the Chinese Digital Giant That Is Changing the World. He joined us on the phone from California this afternoon. Brian, how are you?
I'm doing well. Thanks for having me, guys.
Yeah, thanks so much for joining us. So what is the Tao of Alibaba? I mean, you teach courses on this. Mm-hmm. How would you describe it?
Well, the Tao of the Alibaba is really, as many people would know, is the way or the path that the organization was able to sort of align its team and people to sort of be focused on a common objective, while at the same time giving them sort of the autonomy to make decisions, to be fluid and adaptable to a constantly changing market environment. And that was largely sort of designed by Jack and his own beliefs on how to empower his team. And I wanted to sort of, through this book, highlight and sort of demystify some of those, ethos that the company used to kind of guide itself through the last 20 years.
Well, Brian, you play it out and lay it out all in the new book. But if you had to whittle it down to one or two things that really, as the secret sauce, if we will, to any firm, right? We talk culture, we talk about the leader, the founder. Like, these individuals can often really make a company distinct. So what is the secret sauce of Alibaba in your view?
Well, I mean, I guess it includes a number of components, and like you said in the book, I lay it out. But really, at the top is as we know in the West, and we talk about quite a bit mission, vision, and value. These are really the North Star of the organization, and underneath that is really the strategy. It's really kind of the how in terms of how do you take intangible, abstract concepts and put them into a plan, and then below that really is the execution side, which is organization, people, and performance management. But this kind of structure, while it sounds, pretty standard, there is really a mindset that has to be sort of inculcated within the organization, which, I refer to as Tao or Tai Chi sort of management principles. And that's kind of this ability to embrace sort of contradictions, whether it's trying to become a company of scale by pursuing small businesses or embracing both the East and West. Sort of these dichotomies which give the company that ability to, the fluidity, but at the same time have some structure all at once.
When you look around the tech landscape today, you look at American firms, is there, what's the closest company that embodies these values? Or is there just no comparison to Alibaba?
That's a really good question. I mean, I definitely think there are companies that do embody a similar sort of approach, and these are all mission-driven companies that have done great things. I mean, it could be anything from Apple to Starbucks to Nike. All of these companies have sort of a DNA that sort of runs through it, and they've been able to kind of recreate themselves through the decades. And so, I would look to those as also organizations that have a similar sort of ethos, although each one is unique also in its own way.
Hey, Brian, at times, though, I think about, you got a bachelor's degree here in the United States, you've got a master's also with a U.S. institution, but also with affiliated with a Chinese institution. That East-West culture, were there times where it was tricky? And we've got about 45 seconds, then we'll come back and talk some more.
Okay. Yeah, it definitely was tricky. It requires sort of mental nimbleness to kind of think about things from different perspectives, and that's largely due to the conditions or the environment in which a business is born or created. And I can talk more about that when we come back, but definitely I think that this is a skill that is only learned through experience and putting yourself in an uncomfortable situation. And it was part of my kind of formative, experience while at Alibaba.
All right, sit tight for a sec, Brian. We'll come back in just a moment and continue. Brian Wang is author and entrepreneur, former Alibaba executive, as we said, a former special assistant, in fact, to Jack Ma. His book that is out, The Tao of Alibaba, Inside the Chinese Digital Giant That is Changing the World. And we're going to continue that conversation. I've got a million questions I want to get to.
Yeah, I do too. Really want to talk about the landscape of China right now and what American businesses need to do there, and if they're going to continue to operate there.
All right, we'll continue in just a moment. First up, let's get back to World and National News. Nancy Lyons, she's in D.C. Hey, Nance.
Thanks, Carol. The United Nations is calling a halt to grain shipments moving through Ukraine's crop export corridor in the Black Sea. That's after Russia warned vessels were not safe using that route. Over the weekend, Russia suspended its role in a deal to resume grain shipments, citing drone strikes against its naval vessels. North Korea is threatening to unleash a powerful action if the U.S. does not halt joint military drills with partners, including South Korea. The U.S. and South Korea this week started joint air drills that will run through Friday and involve about 240 aircraft. Bloomberg Washington correspondent Joe Matthew has more on the threat from Kim Jong-un.
The North is threatening a nuke test, which would be the first in about 5 years, and frankly, it's amazing how much he gets away with. It might not lead to anything if he does this, but it certainly gives you a sense of just the risk level in that part of the world around the Korean Peninsula. It's not to be forgotten. We spent a lot of time talking about China and Russia, but Kim Jong-un is still causing trouble.
You can hear more with Bloomberg's Joe Matthew coming up at 5 Wall Street time on Bloomberg Sound On, here on Bloomberg Radio. A successful launch this morning for SpaceX's Falcon Heavy rocket on a Space Force mission.
Falcon Heavy is supersonic.
There we just heard the call out that the vehicle is now traveling faster than the speed of sound. What a beautiful sight.
This is the 4th liftoff from Florida Space Coast, and it's a classified mission for the U.S. Space Force after a more than 3-year hiatus. The Falcon Heavy rocket hoisted military satellites, then nailed the side-by-side booster landings near the launch pad. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Really relevant story considering the Powerball in the United States. I think it's up at now 1.2 billion. It's going to be one of the biggest draws ever because there was a drawing last night. Again, nobody won. And do you ever think about, like, if you win, be quiet, not let anybody know that you won?
It's a good question. I haven't thought about that, but I will after reading this story.
Will you accept the check in a costume, perhaps?
I will gladly accept the check. In a costume, I don't know. I don't really buy lottery tickets, but I guess I should after reading this story. Lottery winner hides $30 million jackpot from his wife and child. A man in southern China is keeping his 219 million yuan, that's about $30 million lottery jackpot, a secret from his wife and child, saying he was worried that the winnings might make them lazy. Check out this image if you're watching us on YouTube or Bloomberg Quick Take right now. The person who won is in a costume, so we don't know his identity.
Yeah, it's a yellow costume. He did go to the lottery office in Nanning. He went alone. It's in the southern region of Guangxi. He claimed his prize, according to the Nanning Evening News. He wore a bright yellow costume that covered his head in photos showing him accepting the prize.
There's a big smile on this mascot's face, like he's getting $30 million. Here's what he said. I didn't tell my wife and child for fear that they would be too complacent and would not work or work hard in the future, the man told the newspaper last week.
He's already donated 5 million yuan to charity and said he hadn't decided what to do with the rest. He collects some 171.6 million yuan after taxes. He says he only slept in a hotel because I was afraid to go out and lose the lottery ticket. So I guess after he won, he drove to the bigger city to present the ticket to the lottery headquarters. Like, won, here, I got it. Let me go get my costume.
I think there's some sort of, we could talk about communication within a relationship here. And exactly. I don't know, where's he going to hide all this money? What's he going to buy? Is he going to spend it? Isn't his family going to wonder if he buys stuff, where he got the money?
Or maybe he donates. Maybe he does.
He donated 5 million
His family
yuan,
finds this yellow costume under the bed. They're like, hey, what's up with this? We're going to continue our conversation with Brian Wong in just a moment.
Facts, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. American International Group reported third quarter earnings that exceeded analyst expectations, even as profits fell from last year in a period dominated by Hurricane Ian and other catastrophes. AIG, after hours, down now by about 0.8%. Advanced Micro Devices, based in Santa Clara, it's the second largest maker of computer processors, topped third quarter earnings estimates, even while giving a downbeat forecast for the current period. After hours, AMD up by about 2%. And Airbnb delivered a disappointing outlook for bookings in the fourth quarter, suggesting consumer preferences are shifting away from higher cost rentals that thrived during the pandemic and back to urban and cross-border destinations. After hours, Airbnb shares down now by about 3.7%. Stocks move lower today ahead of the Fed decision tomorrow, with the S&P down 15, a drop of 0.4%. The Dow down 79, down 0.2%. NASDAQ down 97, a decline of 0.9%. 10-year yield 4.04%. The 2-year yielding 4.54%. Spot gold up 0.8%. $16.46 the ounce, while West Texas Intermediate crude up 2.2%. $88.46 a barrel. Briefly, Amazon shares down 5.5% today, with the e-commerce and cloud computing company closing below $1 trillion in market value for the first time since the early days of the COVID-19 pandemic more than 2 years ago. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. I want to get back to our guest, and I think we talked about this earlier about a lot of the Chinese names that trade here in the United States rallied today on expectations that maybe we'll see more of a reopening over in the Chinese economy and maybe a pullback on all of the shutdowns when it comes to COVID. Shares of Alibaba ADRs in the U.S. were up about 3.6% in today's trade. We are talking with someone who was one of the early employees, the 52nd employee to join Alibaba Group, a former special assistant to Jack Ma. We want to get back to our conversation with Brian Wong. He's written a book, The Tao of Alibaba, How the Chinese Digital Giant is Reshaping the World. And Brian, if I may, tell us, first of all, whenever we talk to something that's an iconic company that really changes the way we do things, I am curious about the visionary behind it. What was it like to work for Jack Ma and some of those early days?
Well, Jack, in the 20-something years that I've known him, one of the most amazing things is fundamentally as a person, he has not changed. He's been saying the same things back at the beginning, and he still says the same things today in terms of what drives him and what motivates him to do the things he does. And I think that's a sign of a leader who's very authentic and very much the person that he communicates to his team and to the outside world. He's demanding, but he's also extremely empathetic and very much a person who is down to earth. Yeah.
Brian, when was the last time you spoke to Jack Ma?
We communicated probably about 2 months ago or so.
Give us an idea of what's going on with him. We know that he kind of disappeared over the last couple of years, and we don't hear from him as much. So just give us an idea of what you know about him and what he's up to.
Well, so as we all know, there was quite a bit of news around the anti-IPO that was supposed to happen in 2020. And following that situation, I think Jack was already retired at that point, and he was very much moving towards his focus on philanthropy and different things. And I think that really just in the last 2 years, he's been laying low to kind of just not be a distraction from the work that needs to be done for the company in light of new regulations and changes. And he's really from what I can see, trying to take some time off to it was a pretty intense 22 years or so. And he's also, I think, planning for his next stage in life, which is really, we talked about philanthropy, he talks about education, he talks about
Brian, did you see his kind of lack of public appearances for that roughly 2-year period that kind of ended over the summer? Did you see that at all as a reflection of pressure on him from Chinese authorities?
Look, I mean, I don't really know the answer to that question, except that I think that this is, Jack was very much doing the things that he was free to move and do the things he wanted to do. I think there was probably a lot of speculation going on at that time, but I also think it was a time when people really wanted to focus in on taking care of the priorities of the business and I don't think Jack wanted to be a distraction to that.
Hey, one thing I want to ask you, Brian. So we said, the book is called The Tao of Alibaba, Inside the Chinese Digital Giant That is Changing the World. This is a company that has changed the world. But, you as someone who understands this, saw this firsthand, in terms of what's going on in China right now, and President Xi kind of laying out things where, the party trumps, it seems, to be all else. Would a company like Alibaba be able to be created in the environment that is China today, or where it seems to be going?
Well, look, I mean, I think that if you were to hear, Jack speak on kind of how time and moments of history do affect companies' evolution, I don't think that Alibaba itself, if it was born today, would be the same company it is. But I do think that if you applied kind of the ethos that we talk about in the book in terms of how to visualize, what is the opportunities for a company and how do you sort of affect that change on a society level, not just build a great business, I think that that would probably provide insight in terms of what needs to be done in today's market environment and in light of kind of a new regulatory sort of approach, how to build a business that would actually serve the needs that exist today. So it's really kind of specific to the time and the moment, but at the same time, the mindset by which one would go about building the business would probably have some similarities.
Hey, Brian, very briefly, you're joining us from California today, but you're based in Shanghai.
Yes.
What's it? I mean, when was the last time you were in Shanghai? I went there a few years ago before COVID, but I mean, what's it like in Shanghai right now? We hear so much about lockdowns and the like.
Yeah, look, I got to California a week ago. It's great to be home. This is where I grew up in Palo Alto. And, I'll say it's been tough, particularly in the last year in March when there was lockdowns. And, it's, I guess what it does is really, it forces you to think about kind of, what is important and why things are done the way they are. I think it also gives me an appreciation for both worlds, when I say worlds sort of East and West, and trying to understand how to kind of make sense of it all,
Would you start a company based in China today, a technology company?
Well, I talk about that quite a bit with my friends who are entrepreneurs or investors, and I think that I don't think the market by any means is one that is closed to opportunities and business venture ideas. I think it's really about figuring out more specifically how you're going to play. You can't approach it kind of generally in a sector. You have to look more specifically in the niche areas and also see where the need is. As you guys know, the whole movement or shift is due to a movement from high-speed economic growth to one of quality. And what does that mean, I think, is where the entrepreneurs and the investors need to think about.
Well, a super smart conversation. Brian, thank you so much. Brian Wong.
I appreciate it.
Yeah, be well. Brian Wong, his new book is The Tao of Alibaba, How the Chinese Digital Giant is Reshaping the World. And what a great East-West perspective in terms of what is going on today and really looking at a company that when we think about iconic companies globally, this is one that really did change things in a big way.
Not to mention the fact that pretty much every company wants to do business in China and have access to that customer. So
that certainly has been,
It
right?
has been.
We'll see if that changes. Anyway, great stuff. Busy Tuesday. We got a Fed meeting and a Fed decision tomorrow. And Tim and I will be breaking it down. This is Bloomberg Business Week.